Hello and welcome to our today's class. Today we are going to look at a revision on an area we call the bank reconciliation statement. So this is an area that is highly examinable, and as students you are supposed to be aware on how we need to tackle this particular question. So first of all, understand that a bank reconciliation statement is a statement that tries to explain the difference between the cash book balance and the bank statement balance. Ideally, when the accountant prepares the cash book in the business might also have a bank account, which is maintained by the bank. The transactions that are entered in the cash book, the bank column of the business, they are supposed to be similar to those transactions that are going to be reflected in the bank statement. The reason being, when you receive a check, you must go and deposit that check in the bank for the amount of money to reflect in your bank account. When you pay your supplier with a check, the same supplier will take that particular check to the bank so that now the amount can be credited to his or her account. So at the end of the day, all the transactions that are in the cash book, they are supposed to be actually similar to those which are in the bank statement. And to that effect, the cash book bank column balance should actually be the same as the bank statement balance. That is actually an overview. So when a bank statement is requested, and then you compare the balance of that particular bank statement with the cash book balance, and you find that those balances are not the same, then it simply means that the accountant needs to do reconciliation, which is actually a statement that will explain as to why the two actually documents are not in agreement. So a bank reconciliation statement is a statement that is prepared actually to highlight why the cash book bank column balance is different with that of the bank statement balance, which actually they should be the same in the real scenario. So for you to be able to understand the bank reconciliation properly, you need to note that there are two reasons as to why the bank statement and the cash book bank column might fail to agree. And those two reasons are, number one, items appearing in the cash book but missing in the bank statement. Those items that you find that they are in your cash book, but when you try to trace them in the bank statement, they are nowhere to be seen. Those items are now the ones that we are talking about here, items appearing in the cash book, but missing in the bank statement. And those items are, number one, A, we have got the unpresented checks. Unpresented checks. These are the checks that we issued to our suppliers, but those suppliers have not presented these checks for payment in the bank. So ideally, these checks, they are captured as paid in the cash book. So they are on the credit side of the cash book, but they are not paid by the bank. So they are not on the debit column of the bank statement. They are known as the unpresented checks. Checks paid, but not yet presented. So they are only appearing in the cash book. So they reduce the cash book balance, but in the bank, that money has not been paid. So our bank balance has not been affected by these particular checks. Number B, we have the uncredited checks. These are checks that we received from our customers. We deposited them to the bank, but they have not been cleared by the bank for money to appear in our bank account. So in the real sense, they have been received in the cash book, so they are on the debit side of the cash book, but they are not credited in the bank. That's why they are known as the uncredited checks. And lastly, under the items that might be appearing in the cash book but missing in the bank statement are the cash book errors. In the process of making the cash book, the accountant can make some errors Either you overstate the receipts in the cash book, you understate the receipts, or overstate the payment or understate the payments, such kind of errors. Also including error in actually the opening balance of the cash book. So those are going to be the items that are in the cash book but missing in the bank statement. See, we have talked about the cash book errors, the cash book errors. And at this point, I want you to note that when we are referring to the cash book, let us have a very simple key account. Debit side records the money in, the receipts. Credit records the money out, the payments. So when you go to the bank statement, the opposite will be true. The debit will mean payment. So we are going to have here a sample bank statement with the date, the details, the debit column, the credit column, and the column for the balance. Like that. So the date when the transaction occurred, the details where the money is coming from or to whom it is paid, the debit amount, the credit amount. Note that when we pay, we shall credit our cash book, but when that check is taken to the bank will debit the same amount here. When we receive an amount in the cash book, we debit, let's say 500, but when that check we shall deposit it into the bank, that amount will be recorded on the credit side as 500. So on the bank statement, a credit means money deposited into your account. But on the cash book, a receipt is going to be debited. So debit corresponds with the credit, and the credit corresponds with the debit as far as the cash book and the bank statements are concerned. Note that one from the onset. Credit in the bank statement, money in. And then in the cash book, money in is debit. Payments in the cash book is credit, but in the bank statement, money out is going to be debited. Those are the key things that you need to remember. So when you're talking about unpresented checks, these are the checks that we paid in the cash book. So in the cash book, they are on the payment side, but they are missing here. They are nowhere to be found in this column of the debit of the bank statement. When we talk about uncredited checks, those are the checks we received them and we captured them as received in the cash book, but on the column of the credit of the bank statement, they are nowhere to be seen here, the uncredited checks. And then the errors in the cash book, we are not going to find those errors here because in the bank statement, it might be exact, but now in the cash book, we made some errors. So those are the basics that you need to understand. Then after having understood those basics, now we can also look at the second category of items that make our cash book and bank statement not to agree. Those are items appearing in bank statement, items appearing in bank statement, but missing in the cash book. Our focus is only the bank column of the cash. We are not interested with the cash. So these items that are in the bank statement that are missing in the cash are those items that the accountant in the business might not be aware of that they occurred in the bank. Because the accountant is not aware that those items occurred in the bank, therefore they will miss in the cash book because the cash book is maintained by that accountant who was not aware that these items occurred in the bank. So they include items like the bank charges, standing order. We have the direct deposits. We also have dividends. We also have discount checks. Interest received. And also sometimes in rare circumstances, we have the errors. The errors in bank statements. These are also errors that are going to either result into overstatement of our bank balance or understatement of our bank balance. They might occur. So how now do we use these items? These items, apart from the errors in the bank statement, they are used in preparing updated cash book. They are used in preparing the updated cash book. And then, together with the errors, this one also comes here. The errors in the cash book are also used in updating the cash book. Then this unpresented and uncredited checks, together with any error that might have occurred in the bank statement, they are used now in reconciliation. They are used in reconciliation. So very important for you to note that in the updated cash book, we use the items that are in the bank statement, but missing in the cash book. Why? Because we know the bank statement should capture the items that are also in the cash book. So these items, they were supposed to be in the cash book, but they were omitted because the accountant was not aware. Now that we have received the bank statement and we have confirmed that they took place in the business, we now include them in the cash book so that we can get an updated cash book balance, which is now the exact balance that we need to have. These ones, the unpresented and the uncredited checks, they will not be used in updating the cash book. Why? Because they are already in the cash book. They are items in the cash book. They are only missing the bank statement. So if we use them to update the cash book, we shall be recording them for the second time. They are already in the cash book. So we normally preserve them and then we use them in doing the bank reconciliation statement. So your updated cash book will be a simple tree account whereby you start with the balance wrote down if it is a debit balance, or if it is a credit balance, you put it on the credit side. Then this side records the payments. This one records the receipts. So any money that we received in the bank but was never received in the cash book, we receive it here, like the direct deposit, the dividends, and maybe the interest received. They will appear here because the amount of money that was supposed to be on the receipt side, they mean money in. So direct deposit, dividends, and the interest received, they will appear on the debit side. On the credit side, anything that meant money out of our bank account, that is the bank charges, standing order, and this one and check, which I'm going to explain, they normally appear on the credit side. Standing order, this one and check. Among other things, they will appear there. The dishonored check is a check that we received in the business. We took it to the bank, but the bank has rejected that check. So it was initially received in the cash book. So we are putting it on the credit side to cancel it or to reverse that check. So it was initially on the receipt of the initial cash book. Remember, our initial cash book is the one that we had that gave us these balances that we are updating. So in preparing those or that particular cash book, this check was recorded as received. Now that we have confirmed it was dishonored, we record that one on the payment side, and that is sorted. Once that is done, you are going to balance your cash book so that you can get the correct balance for your cash book, what we call balance as per the updated cash book. So if this side exceeds this side, we are going to have that balance carried down here. Or if the credit side exceeds the debit side, that balance will appear here. And don't forget that when we are dealing with the bank, we can have a negative bank balance. That is an overdraft. When the payment exceeds the receipts, we can have an overdraft. So the balance as per the updated can be an overdraft when the payment exceeds the receipts, or it can be a positive amount when the receipts exceed the payment. That is how we do an updated cash book. Just an example, but we can have other items that are not maybe on this list. But these ones are the most commonly used items that we find in the questions. Understanding that on the updated cash book, we can now look at the format of our bank reconciliation statement. We have got two ways you can handle it, depending on which items you have started with. So if you start with balance as per bank statement, which will be given balance in the bank statement, what you add here is the uncredited checks. If there is any error that occurred in the bank which reduced your bank balance, you add it also. Error reducing the bank balance, which are rare, but if there is, you add it here. Maybe your account was recorded as, or the amount that was deposited was 10,000. The accountant made a mistake and only deposited 1,000. So that is an error that reduced your bank balance by 9,000. So that one you add it here, the 9,000. So you add error that reduce bank balance, if any. So that now this plus this plus this, it will give you a certain amount. Then now you come here and you rest unpresented checks. Also less error that increase bank balance, if any. This is an error whereby instead of depositing 10,000, the accountant deposited 100,000 in your account. That error increases your bank balance. We need to rest it. That is 10,000 minus 190,000 extra. You rest it there, so that now you can get the figure we call balance as per updated cash book. Balance as per the updated cash book, which is now should be the same as when you prepared your updated cash book. There is that balance carried down that you came or you arrived at, the balancing figure. That figure should be similar to this. That is the first case. The second case for the bank reconciliation is when you start with the balance as per the updated cash book. Balance as per updated cash book. When you start with this balance that was at the bottom here, now it becomes at the top. You add these items that you had deducted in the initial format. You add the unpresented checks. Then you also add error that increased bank balance, if any. You will arrive at an amount there. From that amount, now you rest uncredited checks. Also less error that reduce bank balance, if any. The figure you will get now, it is going to be the balance as per the bank statement. You write it there, and that is done. So you compare the balance that you are given in the question and this one that you arrived at, whether they are the same. If the question balance as per the bank statement is the same as what you have come up with here, then you have done your reconciliation very well. So that is how we do it. And I want to repeat here, remember uncredited and unpresented checks. Those are items that are in the cash book missing in the bank statement. They are only used for doing reconciliation. Only used for doing reconciliation, period. So let us have a look at two questions. Then we can demonstrate what we have just said here. There is this first question that came on November 2022, question 3B, that talks about that on 31st December 2021, the cash book bank column of Kasuku traders. Remember, when we are preparing the reconciliation, our focus is only on the bank columns. Of Kasuku traders had a balance of 53,400, while the bank statement showed an overdraft. Overdraft therefore means it is a negative balance. It is a negative balance. On the same date, on investigation, showed an overdraft of 77,400 on the same date. On investigation, the following discrepancies were revealed. That is what we have there. That is what we have there. We have the statements, and then now we are asked, we prepare an updated cash book. Remember, when we are creating the cash book, we are looking for two things. Those items that are in the bank statement, but they are not in the cash book, and also any error in the cash book. That is what we correct. Unpresented and uncredited, we use them in preparing the second statement, which is the bank reconciliation statement. So how do we go about it? How do we go about it? You can take a screenshot of that, and then I take you through. Take a screenshot of that question, then I take you through. So when you are doing your updated cash book, always remember to start with the balance that you are given in the question that is connected with the cash book. So updated cash book. Simple T. Credit to record any payment that was never recorded in the cash book as a payment. CR to record any receipt that was never recorded in the cash book as received. Then we go and read the question. On that 1st December 2021, the cash book bank column of Kasuku traders had a balance of 53,400. We are not told whether it is a debit or credit. When the question remains silent, a bank is an asset, we put it on the debit side. As balance broken down, 53,400. Then the bank statement balance, we shall use it to confirm whether we have done a correct or accurate reconciliation. So the discrepancies that were revealed, some of them will be used in updating the cash book, but unpresented and uncredited checks. And if there is any error that occurred in the bank, we shall use them in reconciliation. One, a check of 45,000 from a customer was returned as unpaid due to insufficient fund. Whether the reason is given or not, but any check that is returned by the bank, it is normally considered as a dishonored check, which should be credited here to cancel the initial receipt of that check. So this honored check it is 45,000. So don't dwell on the reason why the check was returned. Just the moment you are told it was returned, just record it as a dishonored check. Whether there was sufficient fund, whether the check was torn, whether the check was not legible, whether the accountant or the person did not have the sufficient balance, whichever the reason, just record it as a dishonored check if it was not accepted by the bank. 2, the firm had issued checks to suppliers of 280,000, but only checks of 154,000 had been presented. We issued checks of 280,000, but those that have been presented are only 154,000. So the difference of what we issued and what has been presented, if we issued checks of 280,000, then those that have been presented are 154,000, then 126,000 worth of checks have not been presented, so we shall use them when we do conciliation, not here. And presented checks will never appear in the updated cash book. Note that. Then number 3, bank charges amounting to that 100 were reflected in the bank statement only, so they are not in the cash book. And bank charges are payments because they reduce our bank balance. Bank charges. That 100, like that. Payment there. Then checks deposited and not yet credited amounted to 237,800. Those are uncredited checks. They wait for reconciliation. A standing order payment of 100,000 for rent was reflected in the bank statement only, meaning that a standing order is a payment. The payment the bank is making on your behalf because you issued such instructions. So the bank has paid. In the cash book, we have not paid. We record them. Standing order of 100,000. Then the next one is that direct deposits by customer amounting to 147,100 appeared in the bank statement only. These are customers who have deposited directly into a bank account without notifying us. So the money has been received in the bank, but we have not received it in the cash book. Direct deposit of 147,100. A check of 68,000 received from a debtor was recorded in the cash book as 86. That is an error in the cash book. The check was of 68 and 68,000, but we recorded as 86. That is a difference of 18,000. So we received excess 18,000. We were supposed to record 68 on the receipt side, but we recorded 86. We have got an overstated receipt. What do? We cancel the extra amount by crediting. We cancel the extra amount by crediting. When it is an excess receipt, the excess is credited to minus that. So we can write here overstated receipt of 18,000. And we are done. We are done. Then from there, we can balance our updated cash book so that we can get the balance as per the updated cash book. 53,400 plus 147,100. We get 200,500. That is the total for this side, which should be the same as this side because this side looks to be having more. If I add that credit side, 45,000 plus 3,100 plus 100,000 plus 18,000, we get 166,100. If I minus from this, I will get now my balance as per the updated cash book. 34,400. Once I have that figure, I can proceed to my bank reconciliation statement. Whereby we can start with this balance as per updated cash book, 34,400. Then you add, anytime we start with the balance as per the updated cash book, what we add is the unpresented checks, whereby we were told checks amounting to 280,000 were issued to suppliers, but those that have been presented is 154. So 280,000 minus 154,000, we get 126,000 worth of checks have not been presented. That becomes the unpresented checks amount. Then we add with 34,400, what we get here, plus 126,000, we get 160,400. Then from that, we rest uncredited checks, which we are given as statement number 4. Checks deposited and not yet credited amounted to 237,800. We less that, so that now we can arrive at the balance as per bank statement. So when you do that difference, 160,400, you minus this, minus 237,800, you get negative 77,400. You can put it into bracket to signify the negative bank balance. And when you go to the statement that we were given at the beginning of this question, we were told that on 31st December 2021, the cash book bank column of Kasuku Traders had a balance of 53,400, while the bank statement showed an overdraft of 77,400 on the same date. An overdraft is a negative bank balance. So this figure is very correct. It was supposed to come to a negative. It was supposed to come to a negative. And we have done reconciliation. Once the figure that you have arrived at is the same as the figure that you are given in the question, then your reconciliation has been done and it's okay. That is for the first question. That is for the first question. Let us look at the second question. That is the second question on the screen. The following cash book and bank statement balances were given by Kasuku Traders for the month of December 2018. We have got the cash book bank column, the bank statement balance. We are not told whether there was an overdraft. We take them as positive amount. So in the cash book, we put it on the debit. In the bank statement, it's supposed to be actually a positive bank balance. Then during the month, the following transactions took place or were recorded. We have them, and now we are told we do the updated cash book and the bank reconciliation statement. So how do we go about it? Again, you can take a screenshot of what you are seeing there so that now we can go to the board. Updated cash book. Updated cash book. Start with the balance that you are given for the cash book. We are told it was 235,000, and the question does not tell you whether it's a credit or an overdraft, meaning that it is a positive figure. Positive figure, we mean we put it on the debit side. As balance, we wrote it down. 235,000. Then we update. That is actually the balance that we are updating. This is what our initial cash book showed. But this balance has got some issues because some items have not been added to it or subtracted from it. So let us go to the statement. 1, 400,000 had been deposited directly into the bank by Mwangi. That is what we call direct deposit. So we are supposed to debit money in. It is money in. So that money was received in the bank, but never received in the cash book. Direct deposit. $400,000. There was a standing order of 136,000 to pay rent for Udugu Housing Company. A standing order, it is a payment that was made by the bank, but not yet recorded as a payment in the cash book. We put it on the payment side. Standing order of 136,000. Like that. The foreign creditors had been paid by check. So these are suppliers. These amounts are not yet in the bank statement. If we paid them, but that has not been reflected in the bank statement, those are unpresented checks. Unpresented checks are checks paid, but not yet presented to the bank for payment. So we shall do the summation of those amounts, and then we put that amount as unpresented check when we shall be doing the reconciliation. Then number 4, electricity expense of 4,000 was recorded only in the bank statement. So electricity is a payment. We put it now as a payment also in the cash book. Paid in the bank, but not paid in the cash book. Electricity of 4,000. The foreign debtors were paid by check, but this information was missing from the following debtors paid. Actually, debtors, we cannot pay debtors. We are supposed to receive money from debtors. So the foreign debtors paid by check, but this information was missing in the bank statement. So any money we receive from the customers, but has not been received or recorded in the bank statement, it is actually uncredited. Uncredited is money received, not in the bank statement. Unpresented is money paid, not in the bank statement. Note that. So we shall use that one to get the uncredited checks. Lastly, bank charges were 35,000. Those are payments in the bank, but not recorded as payments in the cash book. So bank charges 35,000. Then from there now, we can do the balancing so that we get the balance as per the updated cash book. So this is the balance that we are looking for. So if we do that computation on the debit side, this one is going to be 635,000. So here we should also have 635,000. If we add this, the missing figure is the balance carried down. The missing figure is for 60,000. The total receipts minus these payments, we get that. Then we can do our bank reconciliation statement. Balance as per updated cash book for 60,000 and presented unpresented checks are those checks that we paid the suppliers, but the suppliers have not presented them for payment. So Musa, Ann, and Odhiambo, let us add the figure 170,000 plus 290,000 plus 325,000. We are getting 785,000. The unpresented. If we add to 460,000, we get 1,245,000. Then we less uncredited checks. In this question, the uncredited checks are the checks we received from Walter, Zeb, Kiki, and Susan. Their figures are 61,000 plus 43,000 plus 120,000 plus 56,000, so amounting to 208,000. So this one should give us the balance as per bank statement. $1245,000 minus 280,000. You get the figure of the balance as per the bank statement here. You are done. You are done. Your reconciliation is complete. Your reconciliation is complete. So that is how we do our bank reconciliation statement. Anytime you feel like you have any issue, you can always reach me on this number. Anytime you have any issue on accounting and finance, always get in touch, and then we can assist each other. So for today, that is the end of that revision section. I wish you a blessed evening.